The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we wrapped up the week of trade on Friday, not the best day in the grains and oil seeds. Got some news headlines out there that really impacted the wheat market and some spillover pressure into the soy complex too. Corn was down a little bit also. Meantime, we tried to find some green on the screen in the cattle trade and hogs too, for that matter, on Friday. That was probably the lone bright spot as we wrapped up the week in the trade. But we got plenty of ground to cover. We're going to talk about the livestock trade a little bit more in depth as well here on the show today. Joining us now for a conversation, pleased to have a new guest with us here. Brady Huck with Advanced Trading and ATI Pro Media joins us here on Market Talk. Brady, welcome into the show, man. How are you?
I'm doing good, Jesse. Thanks for having me on today. I feel like I finally made it. I get to be on Market Talk with Jesse Allen. It's an exciting day for me, Jesse. Big day.
Well, hey, I've been following along with, I know you and Tommy and Connor have been doing a lot of cool things with ATI Pro Media and your live videos every morning. And I knew eventually I would get you on the show and get you wrangled in for a conversation. So glad we could make it work today. I suppose we should buckle up and get ready to see where this thing goes. Man, oh man, I think just overall here, Brady, the amount of volatility across commodities and livestock, just to kind of set this up. I mean, really since Memorial Day, it's been kind of an interesting ride with a lot of money just kind of moving around in different directions here, hasn't it?
Yeah, it certainly has. The cattle market, equities, grains, just across the board, ups and downs, and a wild ride. But it's silly season in the grain markets. But on the cattle side of things, there's so much headline risk out there, Jesse. And these headlines, they pop in, they come and they go, and funds sell, and then they rip back higher. I want to be a bull here with this cattle business, Jesse. I'm in the cattle business myself. My family raises Angus bulls. We have a bull sale every year. I do that when I'm not working with farmers and ranchers on the risk management side of things, and it keeps me grounded. I'm willing to not make money doing the cattle stuff because I do it for fun. I do it for enjoyment. And I think there's a lot of people out there that want to be cowboys for free. We want to make money doing it, but there's some people out there that just want cattle to have cattle. But yeah, this cattle market definitely has some bullish underlying fundamentals still. The supply situation is a story that is going to take time to change. Carcass weights, though, seem to be one of the biggest headwinds. We're making these animals bigger. We're finding ways to bring enough beef to the forefront to meet consumer demand and keep these prices at bay from getting too crazy. Jesse, I'd love to see $2.70, $3 feeders. And yeah, I think there's potential for it to happen if we can just avoid some of the headline risk and maybe get a little more comfortable with the consumer confidence out there in the economy.
Yeah, that's a good point. Well, let's dissect this a little bit more here with cattle. And I'm gonna make a general statement because I was thinking about this here this morning as I was getting ready to talk to you, and I knew we were going to talk a lot of cattle. Someone had made the comment to me, I think it was back at the NCBA convention when we were talking markets about how it's felt like compared to things going on in grains and whatnot, that some of the cattle guys and gals had been drinking more top shelf whiskey as of late because the markets have been very good in cattle. But then, to your point, we got a lot of headline risk that has come into this cattle market and pulled us back a little bit. And then we're kind of like, pull back, trying to run back higher and trying to find enough bullish momentum. But I guess to sum that up, the opportunity for profitability has been there in this cattle trade for quite a while, hasn't it, Brady?
It's been a few good years here, feeding cattle, taking those gains and putting them back into more cattle. I think, those September, October placements at record highs when we placed a lot of cattle when the feeder cattle index was up at 254.10. Those cattle didn't make money in the yard. But now we're starting to see some cattle coming out, going to the packer that were bought maybe at the November, December lows when that market sold off, and they're performing better. We got, more attractive cost to gain out there. Another segment of this industry that I think is maybe having an opportunity to make some money is that cow-calf guy. The price for, cull cows for these coal bulls, and then just their calf crop alone at 250 feeders versus $1.50 feeders, much more attractive, able to put some money in their pocket. But these hidden costs with interest rates, and you place a 800-pound steer on feed and feed him for 120, 150 days. That steer's got to return 60 to 80 bucks a head just to offset what it costs you in interest to borrow that money. If you're putting the money up, or if you're placing that money, somewhere else, money's got to perform, Jesse.
Very true. Very, very true. When you look at charts right now for futures, what's the biggest thing that stands out to you? And this could be either fats or feeders. I mean, you tell me what you're really keeping a keen eye on here as we get into the summer months, Brady.
Yeah, glad you asked that. I'm not much of a chart guy. I love looking at them. I think they provide us with a great idea of where the market has been and what good historical levels are. We've been chopping back and forth for a while here within a range. We're not making new ground, making new highs right now. I'm optimistic for where things could go. But my fear is that headline risk. And looking back at a historical feeder cattle index, 254.10 is the record print last September. And that index is kind of right there again at 250. We hope we can make a new record print for that index this fall, or, going forward the next year or so, 8 months, 12 months. But we can't ignore how attractive that number is. And then some of the premiums that are out there in those futures contracts, they get to trade in 260, 270. That's above that record index, and that's worth protecting. So that's, yeah.
Well, and talk about protecting. There's been a lot of talk. Some folks have said, well, okay, hey, go out and get some LRP. That's kind of an easy way to protect some downside risk. You could hedge, you got put options, things like that. I mean, what's the most attractive risk management tool in the toolbox for you, in your opinion, right now, Brady?
Yeah, this LRP deal, it's a game changer, and it has been since they came in and changed that program. Not tying the cash up until the back. You're not having to put money up front. You get a bill or you get a check at the end of that coverage level. So that's huge, especially when you look at the interest rate environment that we are in. It's a great foundational risk management tool. It's a tool that I offer and use for my customers. I'm a licensed LRP agent across many states. Simple plug there. Then you take that LRP, Jesse, and you pair it with some option strategies, and you can really enhance that LRP, take it to the next level, and manage the volatility that's in this market. And we may not, we're chopping right now, but this market is going to break one way or another pretty soon. And being able to take advantage of that volatility, I think, is going to take your marketing game to the next level here. So if we sell off and you got an LRP policy that's in the money, maybe you hedge that premium with some call options. Or, if we got the coverage on and we rally higher, maybe we can raise that floor up and enhance that and protect more dollars on that calf crop.
That's something that obviously we talk about all the time on this show, that risk management's so key. And if you have the opportunity to, use the tools that are in the toolbox to protect your downside risk, I mean, you could find a way to leave that top side open, whether we're talking livestock, grains, you name it. It's the way the market environment is now. And I think cattle are a good case in point here, Brady, that you have options in the toolbox to protect some of these levels and still give you that added, flexibility to the top side.
Yeah. Yeah. That's huge. And, we don't get the chance to hit home runs or triples, every year. And I think you got to make the most of the bull markets when they come. And right now we've got a great opportunity with those markets. I tell my customers often, I'm not worried so much about the next $20, $30 higher on this feeder cattle index. I'm more worried about the $100 below us historically.
Yeah, that's a good thought too. And the other thing here, cash. I mean, there has been some disconnect between what's going on in the sale barn versus futures here as of late as well, Brady.
Yep. Create some opportunities to, manage your basis and the basis risk. There's basis risk and there's basis opportunity out there. And when the cash stays where it's at and you get some futures movement, it can be in your favor and against you sometime. If you want to benefit from basis improvement, though, I think you got to have a hedge in place, though. You got to have something on.
Yeah, for sure.
Yep.
We're talking with Brady Huck from Advanced Trading, ATI Pro Media. Brady, earlier too, I'll stay at the proteins here just for another minute or two. You brought up demand. I think the overall economy, inflation environment, go to the grocery store, some people not paying for some of those more expensive cuts of beef. They're going
Mhm.
for pork or chicken. But even then, and I've seen some stats as well. I know Kansas State does their meat demand monitor every month. And in that, they talked about how food service, not as many people, their willingness to pay at food service has gone down. They're doing more at home. It's summer grilling season. I just wonder your thoughts, this overall domestic demand picture with the inflationary environment that we have currently. I mean, what is your outlook for that as we get into the summer months?
Yeah, we kind of have this. We just watched, the Roaring Kitty live stream event and the YOLO type moment.
Yeah.
And I wonder, going into summer, summer, I like to get out, have fun, enjoy the nice weather. So that's, peak demand for us. I think consumers are going to make choices, but I don't know if they're going to be making the choices that they have to make until they really have to make them. I'm going to go buy a steak if I can. I'm going to enjoy the moment here now because the future is so uncertain. And we got a lot of drama ahead of us here with the political election and everything else. I think guys are going to want to live a little bit here and have some fun. But yeah, demand is a big piece of the puzzle here, and high prices cure high prices, right, Jesse?
Yeah. That's that old adage that we hear about time and time again. That's been a story of the markets. High prices cure high prices, low prices cure low prices. Like the hog market, for instance. I mean, tough to spend time on the hog market just because how dismal that market has been here as of late, just getting hammered. But then again, I think that's another situation too. Low prices,
Yeah,
eventually cure low prices there, Brady.
absolutely. Yep. And it's gonna, with beef being priced high and pork being more favorably priced, those might come together and meet in the middle.
Yeah. Let's talk grains.
Okay.
Spent a little time over there too. And I know obviously again, Friday was a tough day. Thursday looked so promising in corn and beans, a nice short covering rally. And then we pretty much just gave it back on Friday, or at least most of it. Um, and really since Memorial Day, these grain markets have just been tough. And it just feels like that in a lot of these markets, in the grains, crude oil, et cetera, we've had our short covering rallies, and then we've retraced like 50% of it within a fairly short amount of time, regardless of what commodity we're looking at. It just feels like these short covering rallies have been somewhat short lived.
Yeah. Yeah. They can be fleeting. They don't last, haven't lasted very long yet. But it's still early, Jesse. I want to be optimistic about where this market can go and what can come ahead. It's just, summer's just starting. We got the crop in the ground. Is it as good as it's going to look right now? In a couple weeks, there's going to be more areas that need a rain. Summer's going to be here. But I think if this market rallies, it's going to rally for a reason, and producers need to be ready to react and market when that opportunity presents itself. We can't be dragging our feet at this point, Jesse. I mean, we've seen, almost $5 corn. We saw $5.50 last year on D's corn for the D's 24 corn, but we had just dang near got to $5 here a month ago. And we're not in new territory by any means. So it's kind of a quiet period, I guess, from a risk management perspective until we get to new territory. You might get some second chances to offload some more bushels or manage some more risk. I go back to from a risk management perspective, the first half of the crop is the easiest to market. It's that second half of the crop that is very, very tough. So making those 20, 30, 40, 50% hedges can be very easy. But how do we broadly, protect more bushels and protect more price when we get those opportunities? But long road ahead of us still here, Jesse.
Very true. Well, and the wheat markets have been kind of the one of the highlight catalysts, so to speak, of some of these short covering rallies, really based off the weather concerns in Russia and Ukraine. I know you're the plains though, and there's been a lot of chatter that the winter wheat crop looks pretty good. Early harvest has started up, things like that. Then you got this turkey news that comes out here as we get into Friday. They're banning imports until October. That's a big blow to the wheat market globally. I guess, what have you heard from wheat producers in the plains? I mean, as they get early harvest going, things like that. I mean, what's kind of the general feel around this always curious wheat market? I guess I'll put it that way, Brady.
Yeah. Well, it's definitely wheat has been the leader, right? It's
Yeah.
been rallying and lifting corn, giving corn a little leg up. We'd see wheat up 20, 30 cents and corn gets pulled up a nickel or 7 cents. It's been great. The sell-off here, I look at the silver lining and, KC wheat sells off 90 cents, over the last 6, 7, 8 sessions. And corn hasn't, has held in there a little bit. That wheat corn spread narrowed up. That's maybe the silver lining, that corn's taken a little bit of the reins and didn't get drugged down too bad by this wheat sell-off. The early harvest has started. Talked to a couple customers today, and they said, you know what, Brady, bushels are coming out of the field a little better than I thought. Got some more bushels to cover. What should I be doing from a cash side of things? Cash marketing. Got more bushels to market than I was planning on. That's a great thing. I think we go back to that interest rate environment and the cost of opportunity. A lot of this wheat, I think, is going to get converted to cash off of that combine and be put to work to pay down an operating note. And, I think that's the best place for it to go, in all honesty. You look at the Russian, the Black Sea story and the situation there, we are not going to know the size of the Russian crop for a long time. I could foresee Russia owning this export market for the first half of the 24-25 marketing year. And, maybe the U.S. picks up some export business December, January, February, deeper into that year. I'm really worried about the harvest pressure here up front when we get the combines going. But I want some upside out there. So maybe some sales with some call options is a good way to manage some risk and stay in the game for the long haul.
I wonder too, and I've joked about this before, will we ever know the true size of the Russian wheat crop? I think that's, you know what I mean?
Between Russia, China, South America, we got the CONAB-WASDE discrepancy as well.
Yeah.
Will we see a change next week with the WASDE next week? Will they come together? Just a lot of pieces there. So.
Yeah, it reflects that these are global markets and global influences that we trade now more than ever. In terms of quart of beans, as well, as we kind of wrap things up here today, I know with soybeans, demand has been so poor. What was it? I think we technically, the second China flash sale of the year on Friday, I think was the stat I saw. I mean, unknown destinations was probably China in there too somewhere, but there again, some more you never really know. But soybeans down hard Friday too. I think there's some talk will we see some of these corn acres that have to get replanted? Will they go to soybeans here late? Things like that. I mean, in terms of the row crops, anything else you would throw in there that you're hearing or paying attention to right now?
Yeah. Well, I think today, to me, today's move is all about the dollar. The EU cuts rates, and then the U.S. is the jobs number, the unemployment number. Looks like we're going to hold rates steady, higher, longer. And that dollar just surged today. And that seemed to be a big weight on the commodities here on Friday. But yeah, the beans, less corn, more beans potential. The Brazil tax situation seemed to fade a little bit here. But so many pieces to this puzzle going forward. Beans have a long way to be a made crop. But at the end of the day, I got to wonder, are we building stocks or is the ending stocks contracting? The U.S. is a residual supplier for wheat, corn, and soybeans. And the world's going to come to us when they need us, and they're going to pay us to store it until they need us.
Very true. Very true. Final thoughts from you, Brady, as we wrap up the show here today. I always like to leave this a little open-ended. Anything you'd want to mention to folks, reiterate to them, et cetera, here as they are getting into the summer months.
Yeah. No, you never know what's going to happen going forward. A lot of market left to play out here. Be opportunistic. I love target orders for, what am I willing to sell at? What am I willing to price at? And, keep some flexibility in there for the, the longer term, bigger picture. In 2020, it's $4 corn sounded like a great number until we went to 8 and 9. And who knows what's going to happen, how things are going to play out.
Very true. Well, I know if folks want to reach out to you and get some market advice, I know they can get a hold of you there at Advanced Trading. Very easy. So give us a plug for that. And then also, too, give us a plug for ATI Pro Media, you and Tommy Grisafi and Connor and the crew. You guys go live every morning at 9 on YouTube as well. So tell us where we can find more information and where folks can get a hold of you, Brady.
Yep. Well, you can contact me directly, 620-234-3628. Give me a call or shoot me a text. Watch us every morning live at 9 on YouTube. We go live at 9 for our free content, and appreciate you, Jesse, for showing us the ropes with getting on and streaming and creating content. We've learned a lot from you, and certainly appreciate all we've learned from you. Love watching your channel, and I'm very thankful to be on it here today. Thank you so much.
Well, you bet. Well, and I'm glad to have you on, and we will have you on again real soon. And make sure you check out their stuff again every weekday morning live at 9, ATI Pro Media. And with that, Brady Huck, Advanced Trading. Appreciate the conversation, my friend. Have a good one. We'll talk to you again soon.
See you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.